Welcome everyone to Vested Interest. This is Shane back again for the last stock pick of the day video for this week. It is April 27th. And hey, if you have not done so already, go ahead and hit that subscribe button down below. Join us on this journey to financial freedom. Join the Vested Interest community, trying to build a like-minded community of dividend growth investors in general. So if you like dividend growth stocks, dividends, everything around the dividend investing community, again, go ahead and hit that subscribe button down below and hit that notification bell so you're notified whenever we post any new videos. Today we are going to take a look at a pharmaceutical company, AbbVie. A lot of people I'm sure are aware of it out there, maybe in their portfolio. Let's take a look. So this is my investing criteria when I'm looking at a company to potentially add to the portfolio. On a high level, I'm looking for it to meet 4 of the 7 criteria listed here, or 5 of the 8. If it is a financial company, I throw in this last one, price to book. That only really relates to financial companies in my criteria. So again, 4 of 7 if it is not a financial company, and 5 of 8 if it is. Go ahead and pause this and read this at your leisure. And back to AbbVie, right? www.abbvie.com is their homepage. That's www.abbvie.com. That is their homepage. They are a pharmaceutical company, right? AbbVie's mission is to discover and deliver innovative medicines and solutions that address complex health issues and enhance people's lives, right? Some quick facts: 50,000 employees in 70 plus countries, 60 plus conditions treated by their pharmaceuticals, 250 plus partnerships with leading biotechs, universities, nonprofits, and government organizations to advance sciences, 90 plus compounds, devices, or indications in development includes collaboration and license agreements. So that is actually an important thing to note. It is not just about the drugs currently that they are selling. It is also about what is going to replace those drugs in the future. Typically, these drugs have a timeline where they're under patent, and then they have to kind of open it up for other people to use that patent for cheaper drugs, right? 23.7 million raised by employees in 2021 for 11,400 nonprofits. That's more a nicety there. They are in 175 countries where products help people and patients. So a global footprint here, right? That's good to note. 250 plus partnerships with leading biotechs. I think we saw that actually up here. So that's a duplicate. Yep, that's a duplicate. 20 countries with R&D and or manufacturing facilities. So again, kind of a global footprint even with their R&D facilities. 62 million plus people are treated by AbbVie's products annually. 21,000 employees in STEM roles. 550 plus patient support programs globally. So again, global company, large pharmaceutical company here. www.abbvie.com is their homepage if you want to know more about them. Now back to the fun part. Why are we taking a look at them? AbbVie Inc., ticker ABBV, out of the pharmaceutical company, or out of the healthcare sector. It is a pharmaceutical company. They were down 7.99% today. That is a huge drop on the day for any company. And if you've watched me for any length of time, you know whenever I see a big drop like this, 4, 5, 6, 7, almost 8% here, I'm going to take a look to see if there is potential value being presented. 52-week range as low as $134.09, as high as $168.11. So definitely creeping down towards that 52-week low. I would actually say they're probably about midway between the 52-week low and the 52-week high. Obviously, the closer we can get them to their 52-week low, or if they set a new 52-week low, that would be the better option. Average volume is 5.8 million. Today was 16.7. And you can see must have been a big sell-off in the morning. It looked pretty flat overall, but there must have been a big sell-off at some point here. Maybe that was it right there at the top there, and then kind of leveled out throughout the day. Market cap of 262.628 billion, so a large cap company here. Beta of 0.55, so they are less volatile than the overall market. Price to earnings PE ratio is $22.45. That is a little high in my opinion. I like it down in the teens or lower. For a company this size, right? I don't know that this company has a ton of growth in front of it. They're a pretty well established company, been around for a long time. I know they've even done a spin-off and spun off their Abbott Laboratories. So usually anything in the low to mid 20s or higher is a company that's growing pretty fast. So I'd be a little concerned with this. Might be a little elevated. Earnings per share, EPS, very nice, $6.63 per share. Next earnings date, well, it was today. right? So that may have been it. Maybe they missed earnings. That would be something you'd want to look at. I'm assuming that's what the issue is. Forward dividend, $5.92 paid out in the year. They are quarterly payer. We'll see that here in a moment. They do have a nice dividend yield, very nice dividend yield, 3.66%. Actually, if you could get them closer to this 52-week low back in the 130s, would probably be closer to 4% there. Ex-dividend date, last one was April 13th. And a one-year target estimate, at least according to Yahoo Finance, where I pulled this information, $165.65 per share. So does speak to potential appreciation in the stock price. And as I tell you all the time, you want to get into more than just these topical issues. You want to get down into the statistics, get into their financials. You'll find their income statement, their balance sheet, free cash flow, and their financial statistics. I like to look at for what I like to use as a rough gauge to see if a company is potential undervalued, dividend yield theory. Basically what you do there is you look at the 5-year dividend average, right, 4.42, and compare it to the current dividend yield, 3.66, or what they call right here forward annual dividend yield, 3.66. So 5-year average 4.42, you're looking for a current or forward dividend yield higher than the 5-year average, and if it is higher, it would be potentially undervalued. In this instant, it is lower than their 5-year average. So this speaks to some overvaluation potentially here, right? So according to dividend yield theory, potential overvaluation. Another thing I don't really like here, 85% payout ratio, right? Free cash flow is another one. If you go under financials, you'll find it. I like to look at. They pay their dividends out of free cash flow. So you want to see growing free cash flow over time. This is actually a perfect example of growing free cash flow over time. 12.7 billion, 16.7 billion, 21.9 billion, 24.2 billion, right? So 12 to 16 to 21 to 24. Growing over time, that is consistent growth over time. And another bonus I like to throw in is a repurchase of capital stock. You can see they are buying back their shares. That basically means they are making you more of a shareholder every time. You own more of the company as they buy back shares. That's even if you don't put any more capital in. You don't necessarily have to buy more shares if they are buying more shares back to own more of the company. So that's good to see. Now, I always recommend more than one source. So Yahoo Finance was the first one. Another one that I like is stockanalysis.com. It presents a lot of the same information, just in a different format, right? You can go into financials, you can go in their statistics. This one, forecast, is what we're looking at right now. And they have 19 analysts that have taken a look at this. They actually called a consensus buy, even though dividend yield theory says it may be a little overvalued. They have a consensus buy on it, according to the 19 analysts that have looked at it. They have a low estimate of $135 here, so speaks to some potential downside yet. So maybe one to watch. Throw on the watch list, see if it gets closer to that 52-week low, right? That would be a 9.32% decrease from where it currently sits. They have an average estimate of $164.95. That would be a 10.8% increase from where it currently sits. That's pretty much in line with what we saw in Yahoo Finance. And if it happened to hit their high of $200 estimate, that would be a 34.35% increase in the stock price. All the while, you could collect that 3.6% dividend yield. Now, another one I like to look at here is statistics. I'm looking at the financial efficiency of the company by looking at the return on equity and return on invested capital. I like 10% or better for both of these, or in line with the industry standard. And this really just blows it out of the water. 22.9% return on invested capital and 73.8% return on equity, right? So very, very high numbers on this, right? They are doing something right with the capital that they are utilizing to reinvest back in the company here. So that is very nice to see. Another one I like to look at, this was where I would show you my position if I had one. I do not own a position in AbbVie. Again, verifying that the payout ratio is accurate. We saw 85.01. This is showing us 84.80. I like 75% or lower for a payout ratio, right? This basically means that they are above my payout ratio. So far, dividend yield theory says they're a little overvalued. They're above my payout ratio. Free cash flow is nice. Dividend yield theory says they're potentially overvalued. They do have dividend growth of 6.64%, and they are paying out $1.48 per share. All right, their next pay date is May 15th, 2023. So this one, AbbVie, in my opinion, I would wait for more of a pullback back down into the 130s, 134, 135-ish range. Maybe start looking at it 136, 137. Add it to your watch list if you are looking for something in the healthcare sector, a pharmaceutical company there. They are a big one. They are a popular one, but their payout ratio is a little high, in my opinion. So I would want more of a pullback to give myself a little bit more of a safety net here. And the reason for that, right? They can't really continue to buy back shares. They can't really pay down debt. They can't really do any acquisitions. They're getting close to maxing out this payout ratio without bringing in a lot of new customers. This is just, even though their free cash flow is growing, so maybe they grow out of this. But for me, this is an elevated payout ratio for a company like this, and a little, in my opinion, overvalued right now. Well, that is it. As always, appreciate you stopping by. If you haven't done it already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, hit that subscribe button. Join the vested interest community. Join us on this journey to financial freedom. Uh, if you haven't done so already, and hit that notification bell as well. Drop a comment down below. Let me know what you think of AbbVie. Is it in your portfolio? Is it one you're watching? Are there other pharmaceutical companies that you like better? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. If you have stocks or companies that you would like me to review in a stock pick of the day video like this one, go ahead and drop them down in the comments. I'll work them in on a day they pull back, and we'll take a look at them. And if you have constructive criticism, go ahead and drop it down below as well. I'll take it with a big old grain of salt. Again, these are quick hitters trying to find value in the market during these pullbacks and turbulent times. Hopefully you're having a great week, and we will see you in the next one. This is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, we'll see you in the next one. Thanks for stopping by. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk, and money should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.